Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, and we're doing a little end of the week video for you guys. So I did manage to get two in this week. Hooray! Okay, so let's take a look at where we are currently at. As you can see, um, even after the last week or so, it's been nothing but sideways trading. Now the range has been pretty good, about a 300 point range here on the Dow, but as of right now, it's just literally a huge consolidation. This is about as clean as it gets. Just waiting for moves up or below the areas we've been kind of watching now for quite a while, to be quite honest. This goes all the way back to even the 12th or 13th or so of March. If you take a look, since we've entered this 13,000 area, we just cannot seem to get out of it. We're just stuck in this sideways consolidation. So these will all be areas for you to watch coming into Monday's trading. Still what I have my eye on for sure as we enter the new week of trading. So with the 3-day weekend, we'll see if there's any big news, bad news, good news, whatever news, something news. And I'll be watching the futures, of course, pretty closely come Sunday night once they open up again. But overall, Monday, and I do believe the futures will open up Sunday night. I don't think they're going to wait till Monday, but as it is, looking at that Monday morning trading for our first opportunity to get back into things. As you can see, though, for the most part, with a couple of exceptions of some nice moves up and the hard moves down, we really didn't break anything. Nothing's really changed. It's nothing but a big high base formation. See how clean that is on the daily? And until that changes, it's still a high base formation. Even though we've broke the 20, that's major. Not one, but two closes below the 20. The one to watch next week, the 50. That'll be a major area. Should hold as support, at least on a closing basis. And that's why it'll be kind of an interesting time to watch the markets. If things are going to get going, the bulls kind of need to get them going soon. The bears are ready to take over. Things are very extended. They're very tired up here. As long as we move sideways, though, we are still more bullish than bearish, but we are on the precipice of a potential drop to the downside. And if that happens, once things get rolling, I would say watch out. Usually when the bears get themselves rolling, boy, it is just constant selling, hard pressure. Any news that comes out that's even quasi-bad at that point is large drops in the market. Just really volatile type trading once things get going. So, as I said, bulls really need to push things early next week out of the weekend to kind of get things going. Here on the NASDAQ, you can see that same consolidation moving sideways here. It had a nice move up, though. You'll see that it's up over 0.5%, where the other markets were up only about, well, they were break even, actually. There really wasn't a whole lot of movement at all to the other markets, but the NASDAQ did very well. This is the NDX, which is the 100 strongest stocks in the NASDAQ, and you can see that this did very well today. A lot of it had to do with Apple, which once again, total beast. Up and on to new highs in Apple. So if anybody's been long, just continue to stay long. Things still look good. Very extended in Apple as well. But as long as it keeps going up, it'll be difficult for the NASDAQ to drop. And you saw that again today as we march our way sideways. Levels here pretty well settled out for you. You'll see it on a daily. Here it is. Now this one held the 20-day moving average, so you can see where our levels are and what we'll be watching for coming into next week. The volume has been up, it's been down. Today it was down. Of course it was down. It's a 3-day weekend. Nobody wants to make any major moves before a 3-day weekend. So expect the volume for the day to be down, expect the volume for the week to be down, but don't read too much into it. So what? We missed a day of trading, and it was a shortened week. So yeah, you're going to get different volumes. Just don't pay too much attention to it at this point. Wait till next week, and let's see what we get coming into next week's trading. From a weekly, still up for the week. Nothing but a monster. If you went long the NASDAQ since the middle of December, you're making money. It's pretty easy. Throw a dart at a chart and you can probably make some money to the long side here on the NASDAQ. It's been pretty simple to do, and it's been nothing but upwards pressure every single week for the last umpteen months. So is it slowing down? I don't know. It tends to be flattening out a little bit, but that could just be, like I said, another high base type formation. So there's nothing here that I can really read into at this point to tell you mega bullish, mega bearish. You just have to wait for the moves, wait for the breaks. Here's the lower side of the SPX. I moved my line from the upper to the lower, and you can see we're still pretty well defined in here, still moving upwards. And today and yesterday, very, very stationary. Bulls did not make a move here. This, for all intents and purposes, is a low base formation, and another reason why you need to watch for the Bulls to take over and take over early coming into next week. We get drops back here into the 1390, 1380 type levels. Probably a precursor to more bearish action to come. Now we could get down into these areas, see a pretty healthy bounce, but up here around this area, I would expect to see things roll over and head back down if we don't go up early next week. This is why it's so crucial to see that move by the Bulls early. SPX Daily holding well to this upper line as it has a bajillion times, and bajillion is a lot. Many, many times in the past as it struck this upper line and ran away from it. But overall, you can see since we've entered this 1400 area, we've been basically sideways. Very difficult trading in through here. It's hard to take a position, especially if you're a swing trader. This is all but impossible to trade. It's been very difficult to get in and stay in for a couple of days without getting whipsawed out. So, and this is why. Just a flat, straight, right across the board move. Very difficult. However, keep in mind, not one but two closes below that 20-day moving average. So you can see where the caution and concern is going to start to set in. This is why, once again, important that the Bulls take over. The VIX still looking good down here, does tend to have a rolling under type of effect happening to it here. I won't get too excited till we get back above the 20 mark, but as it is right now, we have seen it come all the way up from the 14s and consistently move its way back up. As long as it stays below 20, though, still a lot of complacency within the markets, not a lot of fear happening right here, and that's why, yet again, so important to see what we get over the next, for this chart, next couple weeks for sure. But back above 20, that would be a big deal to me. As it is today, the markets were down for the week, and the VIX was up. The markets were basically flat on the day, and the VIX was up. So is that a precursor? I don't know. We'll have to wait and see. But you can see that maybe they're starting to get a little bit more concern in the markets. But like I said, till we clear that 20, not too worried about it. FAS on a 60-minute, wandering sideways. Very, very clean here. 104 and 114 were my levels to give you. We had one sharp jut to the downside below the 104 mark, but it quickly fixed itself, and since then we've been bouncing and bouncing and bouncing off the 104 mark. You don't suppose I have some interest in below 104, do you? Maybe. 104 and 114 will be your areas to watch next week. Very well defined as well, looking just like the indices, as it should, as these things follow along sideways, nothing but sideways. So, looking to see if we get that break down early next week. FAZ, then of course the same thing, only in reverse, from the standpoint of consolidating sideways, but at the top side of its move. So, once again, back above 21.75, back below 20. So even $20.22 if you want to be more conservative. Those are your areas to watch in the next week, and the daily shows the exact same thing. We've seen this huge down channel here, which was held and held and held and held and held and held and held. Now we're getting a sideways consolidation. So back to around the 20-day moving average. But this sideways consolidation very well spelled out on your 60-minute charts. So for those of you that like FAS, FAZ, here you go. It don't get any more clean than this. You wait for a break one way or the other, make your move, see what happens. You might even have to try a couple of times. Sometimes it takes a couple of attempts to break up and through, but I would certainly tell you to do it. So if it doesn't work the first time, take your stop, get stopped out, use stops. Shame on you if you're not. But take your stop, get out, and then try again on a second attempt. That should wrap it up. Takes us back to the beginning of the video. And there you go. Pretty clean, guys. This should get you all prepared and ready as we get into next week's trading. I hope you all have a blessed Easter. Really, enjoy your weekend. Take the 3 days. Clear your mind. Get ready for some more trading coming into next week. If you enjoy what you see here in the videos, try my subscribers video. $28 a month. It's literally $1 a day. Well worth it. I do videos every day except for Saturday. A lot more in-depth. A lot more lines, a lot more technical analysis. Talk about oil, gold, stocks, you name it. So very, very in-depth. You can try it, see what you think. You're not required to stick with it for 3 months or 6 months or a year. I do it on a month-by-month basis for you guys. So it's really actually a good deal. $28 is what you're going to spend on dinner tonight, more than likely, if you go out anywhere. So well worth it for an entire month of education. Education as well would be the mentoring course. If you really want to take your trading to the next step, if you're really ready to learn, okay, what do I do and when do I do it? That's your course. That's the ultimate course. It's one-on-one. It's just you and I. You're not in a classroom setting. You're not with other people, so we move at your pace. You can ask any and all questions you want to. There are no DVDs associated with it. It's you and me, live, one-on-one for every single course, and you don't have to take time off of work to do it. I work around your schedule, which means maybe we work at 6 o'clock at night, or maybe we work at 11 o'clock at night, or maybe we work on the weekends in the morning, or maybe we work on the weekends in the morning and the afternoon. It's really completely up to you. I let you guys set that schedule, and I just try to work around it as best I can. So write me about that, and I will send you more information on it. We can talk more about that, especially since we're really getting extended here. I don't want you guys to miss that move. So now is the time. Now is the time coming into April. Okay, is that it? I think that about wraps it up. You guys, once again, have a great weekend, and we'll see you again next week. Bye.